Hey everyone, today the S&P 500 closed positive, and here's what we need to know ahead of the inflation report tomorrow, ahead of the ECB rate cut, ahead of the initial job loss claims. We're going to be dissecting some of the market price action and our expectations for the big economic data that comes out tomorrow. Tomorrow should be very, very wild for price action. Starting earlier in the morning, you have the ECB deposit facility rate, you have the ECB monetary policy statement, and you have the ECB rate decision all at 8:15 a.m. Then we cruise into the 8:30 period, and we have continuing job loss claims. We have core CPI. We have CPI year over year, which is expectations of 2.9%. Today we saw a much cooler producer price index, and the markets sold off from the highs. Then we have a month over month number looking to come in at about 0.3%. We'll see if that comes in line or a little bit lower. Chances are that number likely comes in a little bit less, considering PPI came in much lesser than the expectation of the market. However, the market doesn't want it to come in too cool, because then it means that we're entering a bigger disinflationary trend, which is actually typically bearish for stocks. Kind of counterintuitive, I know. Then we move along. 8:30, we have initial job loss claims. And to me, this is the bigger economic print. Your initial job loss claims is kind of the thing that I think the market is really going to be focusing on. Inflation is important, yes, but initial job loss claims, monitoring that employment data is going to be key. Why? The initial job loss claims have been putting in some higher highs really since we marked a low here in late July. So this is something where we've seen recent economic employment data deteriorating, aka potentially giving us some glimmers of maybe an economic recession coming into play. We're not in a full-blown recession, but perhaps we're seeing the cracks that are starting to occur in the labor market, and that's what the demand in the bond market is showing us in the near term. The big area that we're still watching is that 250K print. That would be the first higher high in roughly a 12-month period that the market is going to look for. So initial job loss claims are going to be ever so important tomorrow. Then we cruise along. We got nat gas inventories. We got some 4 and 8 week bill auction. Then we have the 30-year bond auction at 1 p.m. and then the Federal Reserve balance sheet. So right now, on a technical basis, the market is still in an uptrend. We're still putting in higher lows, higher highs. I still have some higher price targets on the overall S&P 500. But we are starting to see those intraday divergences where you're looking and observing institutional sell programs. For instance, today, the market gapped up to new all-time highs, and look what the S&P 500 did on SPY. SPY ended up going through a nice wave of sell side programming, almost going to the negative side. In the live day trading room today, we issued a short, basically right at the exact pivot high for our S&P 500 trade. Our 654 SPY puts went over 300% on our running trade. Why did we short that area? Pivot high to pivot high to pivot high to pivot high, right through that Pierce zone in an extended move, a nice couple intraday divergences, and some other secret factors that I like to keep to myself. But that was a monster win in the live day trade room. Come check us out. We will be trading the markets live tomorrow. We'll likely start to stream a little bit early since there is some economic data to really digest in the morning, but it's going to be a wild pack session tomorrow. I don't know which way it's going to go. All I can do is look for trading opportunities, buying support, selling resistance, and that's what I'm going to look as in terms of my SPY trades. I have a whole host of new swing trades on deck that I've issued with my members. Today we also took profits on our IWM put options, which absolutely printed to the downside, and we saw a massive, massive collapse. So we entered a few new positions ahead of the inflationary and job loss claims report tomorrow, but it is going to be very, very interesting to see what this overall S&P 500 market does. Again, the S&P 500 is still putting in what? Higher high, higher high, higher high, higher high, higher high. I would love to see a gap up again tomorrow, but it's not what I want. It's what the market gives us and puts in front of us. If the market gaps up tomorrow, there will likely be yet another shorting opportunity just like today. I want to give you a little bit of a trading strategy that has worked out, and I discussed this with my subscribers in the morning and members. I said, whenever the market gaps up on the S&P 500 into new all-time highs, there is a high statistical probability that you see a reversal back down, aka a sublime trading short strategy. We saw it over here. We saw it over here. Sell off. We saw it a gap up new all-time high. Sell off. We saw it over here. Gap up new all-time high. Sell off. We saw it basically over here. Sell off. We saw it over here. Sell off. And we saw it today. Nice little sell off. So those day trading scalp opportunities are picture perfect when the market gaps up into new all-time highs and you find a key resistance level. On that note, please give this video a like down below. We'll see you on the charts a little later.